What's going on, traders? Andrew O'Connell here with Pristine Capital. It's January 20th, 2022. I apologize, I've been away from these videos for a couple days. I actually had nasal surgery 2 days ago. I had a deviated septum and they were correcting it. It's basically very difficult for me to breathe out of one side of my nose for really like the past decade. Finally got it corrected. But yeah, it's been a tough couple days just recovering from the surgery. I wasn't going to start making videos until next week, but I didn't want to leave you guys high and dry in this crazy market. I just wanted to share with you my 2 cents on what's going on. So let's dive into this video. Quick first disclaimer, nothing in this video is investment advice or recommendations, so please follow your own trading plan, your own risk parameters. Alright, let's take a look at the indices. And coming into today's session, I actually have this positive indication. The dealer gamma and dark index were saying, hey, dark pool buyers are getting active. Historically, this has been a very high probability long signal. But today, that long signal ended up being false, at least for today. Maybe it ends up being a great signal, but yeah, the market really just flopped over. So we have the SPY down 1.11%, Qs down 1.3%, IWM down almost 2%, Dow Jones down 0.86%, and the ARK Innovation ETF actually finished positive. Volatility was up across the board, and the breadth ended up turning very bad throughout the day. There were really no safe havens today, and the semiconductors, which have been great over the past 2 years, they really buckled today. And it's been just like up for these semis, and now it looks like we're starting to get some a reclaim of some of those gains from the past 2 years. So let's take a look at these indices. Sector's only good spot to be really was China today, and I'm heavily concentrated in China, which is good, but it certainly was not all good for me. I had some calls that I put on today due to that dealer gamma signal, and those ended up going against me for today. So sometimes you take a really high probability trade, and that's what I was faced with. Here's this opportunity, it looks very high probability. I'm going to always play the odds. Sometimes that's how it is in trading, where you play the most high probability move and the trade doesn't go in your favor. So that's why it's always important. Just make sure your position sizing is appropriate. Especially like, if you feel emotional about what's going on in the market, let me tell you, like the market that we've had over the past 2 years, it really hasn't been normal. The market, it goes up and down. A lot of times there's big drawdowns. 10% corrections are actually pretty normal in the market. So if you ever feel like, oh, this is too much for me, like, I lost money today, what the heck's going on? One, I would say just make sure your position sizing is appropriate. And then two, like if you feel like, oh my gosh, it's too crazy, it's all moving too fast, never be afraid to sit on the sidelines. Never be afraid to not use options either. Because the last thing I want is for people to get hurt, or like, oh my gosh, like I'm upset by what the market did. Because when you've been doing this for a long time, like the market's going to do what the market is going to do. And there's tail events in the market, there's big drawdowns in the market, there are scary things that happen. That's just like a feature of the markets. So you don't want to be getting emotional or scared or whatever. Really, like if you feel uncertain or you feel scared or emotional, you just can't be committing that much capital in that market environment. And this is really the market environment where things can get very ugly. This is why I want to make this video today specifically. Look at what's going on in the S&P 500. This is our 20-week moving average, and we've been respecting it really since the coronavirus crash. Look at this. Every time we've hit it, we just bounce right off, and we continue to make new highs, new highs, new highs. This red line, this is the prior high from before coronavirus. I remember trading back here and being like, man, the market's so overvalued. It was at like 3,400. Now here we are, we're at 4,461. So yeah, now we're cascading below this 20-week moving average. So this Goldilocks period, this golden age of investing and trading, this might be over. You might be in for a more normal period of trading. So we have to be prepared for that. We're inside this yearly value area. We could end up hitting the other side of this yearly value area this year at 40.55. So it's always important to know how much exposure you have, and always just, like, if there's a trade that you can't lose, like if I lose this trade, like I'm gonna lose everything, or I'm gonna be really upset, or like I can't handle it, that means don't do the trade, or that means your size too big. So long as you're sized appropriately, you'll never feel those emotions of like, oh my gosh, like I just blew it, or just messed up. So yeah, always make sure you're being appropriate on that. Now let's take a look here at our daily chart. Yeah, it looks weak. We have the 200-day moving average right below us, and at this point it seems like a very high probability that we're going to hit that 200-day moving average. Nasdaq. The Nasdaq, we just had Netflix report earnings after hours, and the earnings report was horrible. So, I mean, they beat earnings by a couple cents, they missed sales by a couple cents, but the reaction to the earnings was just terrible. And it's telling me that investors might be starting to panic. So let's look at Netflix. Yeah, Netflix is down a cool 25% after hours. That is very significant. And that could really cause investors to panic tomorrow and take more money out of more of these FANG stocks. So I just want to get everyone ready that, the market might panic. And I always want to be perfect. Like today I did buy some SPY calls. I had that what I thought was a high probability signal. That signal didn't work. And it's super important. As a trader, for me, I've been doing this long enough where I sort of know if I take a trade, it's because it's high probability. That doesn't mean the high probability trade works. And you always have to position yourself where if any trade you put on doesn't work, you're going to be okay and you're going to live to fight another day. Here's the other thing that I want to go over real quick. It says dealer gamma as we see it now. Let's take a look. So it is very elevated. This is the most significant negative dealer gamma that we've ever had since the history of this indicator. And it's been recording data for about a decade now. Since 2011, over a decade. This is the highest amount of negative dealer gamma. This means that depending on which direction the market takes tomorrow, we can already see the futures are pointing down. These dealers are going to have to be shorting futures. If the market's going down, they're going to have to be buying futures if the market is going up. So basically what that means is whichever direction this market picks tomorrow, we're probably going to see a very large move. So, I positioned in some calls today. I am 65% in cash, 35% invested. I would love to see the market go up. But if the market goes down, that is okay with me. I don't have anything in the market that I can't afford to lose. I've de-risked and then I'm in 65% cash. But it's just super important. Be careful about the amount of risk that you're putting out there when the trend is this negative. Because this is something that we've never seen before. So we don't really know how the market's going to react tomorrow. So let's take a look as well at this other indicator I'm looking at. What I noticed today is that this equity puts call ratio didn't rise. So it was at 0.55, and then if we look at total puts to call ratio, it was at 0.91. It also came in. So I think it remains to be seen if we have actually had like a full-on panic in the market. I don't know that we have. So I'd love to just wake up. These futures are green tomorrow. We just rip to the upside. That'll be great. But there's also a scenario that we rip to the downside and we take out this 200-day moving average. So I know it's easy for me to say, hey, the market could go up tomorrow or down tomorrow. With the negative dealer gamma that high, we're probably going to have a very large move. It's just important to make sure that you're prepared for either side. It's not like you can be long and short at the same time, But just make sure, I don't want to see anyone blow up their trading account or blow up their investment account or whatever. It's super important. Just always live to fight another day, because guess what? When this clears up and we make it out of this and we make it to a new uptrend, there's going to be a fantastic opportunity to make a lot of money on the other side of it. What's super important is making sure that you get there, making sure that you're along for the ride. And you can't get there if you've blown up your trading account, or you just got so frustrated that you quit, or whatever. See, think about this. In this 2020 crash, a lot of investors, they probably hung it up. They were like, oh my gosh, like, I blew it, my life is over, it's all gone. And then look at the rally that we had. It was fantastic. 2020 ended up being a great year for most investors. See, it's very important. We might still be at the early stage of this correction. This is week 3. But we're going to make it through. We're going to make it to the other side. So it's very important with your trading and your investing. Try not to be emotional about it. This is not an emotional game. It can't be like, on days when the market goes up, I'm happy, and on days when the market goes down, I'm sad. Just be careful. Always, the only thing we can control is the amount of risk that we have on our portfolio. All right, let's take a look here, and we'll check out our VIG-Tech options order flow real quick. Then we'll take a break, so my voice is kind of giving out here. So let's see, VIG-Tech. I apologize. My voice is just so off from that surgery. I should be back at full strength next week. Let me see. Yeah, I'm not on the camera. I have a bandage on right now, and I don't think you want to see what I look like right now. Okay. Let's look at our TradeScape. Let me take this filter off. Let's see if everyone panicked. Tesla, mixture of puts and calls. SPX. Yeah, look at this. So many calls going up today into the weakness. That's not really good. Doesn't show a lot of panic. Amazon, a lot of puts going up. Microsoft, mostly calls. Yeah, this doesn't really look like anyone panicked. AMD, they panicked. See, we'll have to see for tomorrow. What I want to make sure of, this is my goal for tomorrow's session. 35% invested, and I might have to go to 0. This market doesn't look good. It looks like this could turn into like a crash event. I don't say that to scare anyone, but I just say that because that's looking like what it's shaping up to be. So yeah, for tomorrow, I'm gonna keep all the risk that I have on currently, just keep that in the mix. I want to make sure I'm not throwing good money after bad. Like, let me keep adding, and I want to make sure I'm being responsible here, and not just going crazy, throwing on more risk. Unless this market really changes character, I'm good with where I am, and if anything, may even take down some more exposure. So that being said, I hope you all have a good night. I know today was tougher day in the market if you had any long exposure on, but rest assured there will be better times ahead. On the other side of this market volatility, there's always a great market opportunity. Hope you all have an awesome rest of your night. I'll see you all tomorrow.